please welcome Jenny Just to the stage. Jenny, from the bottom of my heart, thank you for being here tonight.
Yeah, my pleasure. Thank you.
It's a pleasure and a privilege to have you. How did you wind up at the University of Michigan?
So I had a brother who went there. He actually started at Michigan State and then realized he was at the wrong place and went to Michigan. So
sometimes people get those confused.
That's right. I actually was a big basketball fan, and so I always wanted to go to Duke, and I got waitlisted. So the number 1 and 2 people in my high school class went to Duke and Notre Dame, my top 2 places, because I didn't want to go where my brother was. And my mom had told me the only rule was you had to go out of state, because she did not go out of state, so she wanted me to go out of state. So that's how I ended up at Michigan. As it turns out, my brother's a couple years older. I didn't see him so much anyway.
Yeah, he was doing his thing and you were doing yours.
Yeah.
How were we in basketball back then?
We were pretty good at basketball. In fact, I went to all the games because I had a high school classmate who was on the team. Now, he didn't play, but I got tickets.
Yeah, that was the most important part. You got tickets.
The most important part.
You got tickets. Excellent. So you graduate from Michigan and you go into the options world and the trading world, and you're doing really, really well in that world, according to your husband.
Yeah.
And Matt is a good friend and co-founder of PEAK6 with Jenny. And you're doing really, really well in that world. What inspired you to leave the security of that world in many ways and become an entrepreneur and found PEAK6?
We didn't want to leave, actually. So we were super lucky to work at a firm. Some of you are probably, maybe you're all too young, O'Connor and Associates, which was well known for, there we go, I got 1 thumbs up out there, for training the best in the options trading world. So I didn't know anything about options. I was lucky because Michigan brought O'Connor there. So that's how I found out about the firm. But I literally didn't know what my job was. The first day, they put on a coat and I went to the trading floor. I was like, where am I going? What am I doing? So I really didn't know what my job was. But I loved it. I was surrounded by a bunch of smart people. Working on the trading floor was one of the most, to this day, still one of my best working years of my life. And I continued and progressed sort of quietly, quite introvertedly relative to today, in a methodical way through the organization. But eventually, Swiss Bank came in, and they did originally a joint venture. I actually got to help start and build a business very early on. So we were in our mid-20s. Matt and I both got asked. We were not married. We were not dating. We knew each other for a very long time before that actually transpired. But we got to start the over-the-counter equity derivative business for the Swiss Bank O'Connor partnership. And it quickly swamped the listed business. And we learned a whole bunch of things as a result of that business. And for those of you not familiar, these are non-exchange traded contracts. So we would trade with Microsoft and Dell. We would trade with Oracle or General Motors. We would trade with American Express Financial Advisors. So it's corporations and institutions who want to do option transactions. And you need a bank to do that. So that's where Swiss Bank came in. We got to go to that side. People talk to us, right? We're 25, 26 years old, and they cared to talk to us because O'Connor was suddenly opening up, and they had been super quiet for all those years. Anyway, so we go and do this. We want to continue, but they're now going to move the headquarters to the East Coast, so we weren't going. So we would have stayed. We actually had suggested an idea for a business, and they said no. So we left. And I think, but to your point, did I have sort of a bug in me? People knew me, and Matt would say this, I'd always said, there's a better way. And it was one of our first sort of, trademark things we would say at PEAK6 for many years. I mean, I remember when I was at Michigan's business school library, when I worked, I'm like, there's got to be a better way. I remember when I was a kid, one of my first experiences when I kind of realized, is it just me, right? My dad handed me a stack of paper, and this is when there was dot matrix printers and all the papers were connected. And he told me, stand there and drop the papers, but hold on, right? So I drop it. The paper drops to the floor. It's as long as me and then an inch on the floor. So those are all the people who haven't paid me for the surgery I did. So he was a doctor. And I was like, wow, there's got to be a better way, right? So I think early on, by the time it was our turn to go out into the sort of the real world, we had a couple ideas of what we were going to do, but I didn't fear it. But it also wasn't talked about like it is today. You didn't see it everywhere. You weren't compared to other people. I was just kind of the not very smart person who thought they were going to make it on their own. But people kind of left me alone. I mean, I wasn't that smart, right? I actually had a 1-year-old. Matt and I were not married. I had a 1-year-old, and I was a primary breadwinner in the family. So it was not something I should necessarily have been doing.
Wasn't the rational thing that most people at that point do.
No.
But I mean, one of the things that I've gotten to know about you over the years now is you do have this mind where you identify a problem that other people might just overlook. Mm-hmm. And then you're tinkering with what would be solutions to that problem. Where did that come from?
You know, again, I go back to my childhood. I was an only girl. I had 4 brothers. Nobody cared to help me, and nobody was my best friend. So I was there to solve whatever I thought was the next best opportunity. Yeah. And I think when I started working on the trading floor and in the trading business, it was all men, right? And so I was an annoyance, or I was the odd man out. So I had to solve my own problems. I had to figure it out myself. So being the only woman actually was to my benefit, I think. I kept my head down. I worked really hard. I don't know if any of you remember when the Chicago flood happened, but basically all of downtown was closed. And at the time, O'Connor, of course, because why would you pay for the insurance, didn't have a backup. So what they did is they sent people out to their coast offices, and then we worked on the upper level of the Chicago Board Options Exchange, and they had a generator up there, redoing by hand all of our positions. And I actually sat there with a very famous man. His name is Clay Struve in our business, one of the best risk managers probably in the world. I was somehow solving that problem alongside of him. Mm-hmm. And if it weren't for that, PEAK6 probably never would have existed.
Yeah.
So
talk to me about PEAK6 as a firm. So the original vision and how that evolved over time. Was there a defining moment in the early days of PEAK6 history that really established the course that you're on today?
I will tell you quick, because I know the introduction may have sounded odd. So initially, we're a proprietary equity options trading firm, and today we still do that business 22 years later. We didn't have visions of all these other things that we were going to do. We had the high-class problem of making more money than we could deploy into the strategies that we were looking to do at that time. Of course, we were smaller than we are today, but sure, that was good risk management. So we looked at each other, and usually in trading firms, at least at the time, the partners would take out the money. They would have a pot of money here that they traded, and then they did their own thing over here. I had the good fortune of having a team of people who we worked together, including Matt, obviously, and we said, we're going to keep all our eggs in this basket so we can all watch the same basket of money instead of one eye here and one eye there. And so we decided to do some things. And, you know, when you have too much money and you're young, you do some dumb things. And Matt likes to say we probably have failed in more ways than most people you know. The good thing is we're good risk managers. Yeah. We fail quickly and we fail small. So whether it was a chicken cleaning business or a Ferris wheel,
Did you say a chicken cleaning business?
Yes, actually. You can't make that up.
You cannot make that up.
Yeah, so it's real. I mean, we did an oil field. I mean, it's the gambit of things. So clearly, we were a little bit, too big for our shoes. And when we settled back down and realized, this money, who knows if this money's still going to come, the market started to change, and we started doing some things in what I would say is close to the boat. The closest alligators to the boat, traditional ways that people in trading would start to expand. We did a hedge fund, which we built up to $3 billion. We ended up selling it. we built a firm called Options House, which is a retail broker-dealer at the, sort of the early stages of those online broker-dealers. We ran that for almost 9 years and sold it. It's actually under E-Trade today. It took a couple steps to get there. And those were sort of the meat of it. I'll tell you real quick, what I would say a very pivotal point, right, that where we ended up in doing many more things, where PEAK6 really became a company of many different types of companies, was when in the hedge fund we actually owned a convertible bond in a company called Penson. And I don't know if anybody remembers it, but it's actually a good story. It should be made a movie, and someday maybe it will. So we owned the bonds, but they were also our custodian and clearing firm, and for Options House. And we got a call on a Friday from the CEO, and he asked to borrow some money. And when your custodian, who's supposed to be holding your money, asks to borrow some money, there's a problem. Well, there was a problem. There was announced fraud. And so we go through the weekend panicked about our customers at Options House and what's going to happen. And then on Monday, the SEC calls and says, we need $70 million by Friday.
By Friday, you have a week.
Yeah. And there's announced fraud, no due diligence, or Options House is done. So we obviously didn't want that to happen. We also were wondering, who the hell else are you calling? There's got to be somebody else. Who cares? In fact, Penson had been looked at by many people along the way, and there had been a bunch of due diligence, and nobody had bought it, which was also not a good sign. But for some reason, we took that bet. So we bought the firm, actually 13 days later, fraud and all, and we changed sort of our trajectory, our destiny. Fork in the road, right or left. We were likely going left, and we went right. And as a result of building this company, Apex, which is now Apex Clearing, we learned a lot about ourselves and what the skills of all the team are, the things we like to do, the things that now, wow, what made us good in trading is actually really good operational skill. It's not just good trading skill, it's not good risk management skill, or at least they didn't have any of it. Right. So. Right. It really was set up as a boys club, as a very traditional male-dominated boys club. So we go in there, we turn that thing around, and we actually got rid of a bunch of employees, as you would expect, but we also got rid of 2/3 of the customers. So we're just going to make Options House survive. That was our only goal. Well, in that process, we do new account opening technology, just for ourselves, no foresight. And lo and behold, robo-advisors come along. Robinhood, Wealthfront, Betterment. And guess who's the only one who has account opening technology that's, not 30 years old? So next thing you know, we are the back end for all of these. And these clients today range from those names to Stash, Ally, SoFi. We even have some historical names: Prudential, John Hancock, Goldman Sachs, Capital One. So we are the only firm that actually changed technology through that period of time. Now, of course, there are a bunch of firms that are starting to do that. Robinhood actually was with us almost 6 years. They left last November, and they became self-clearing, which at the size they are, you might have expected. But really, it was a fortuitous moment. It wasn't a Steve Jobs foresight thing. We really did it to solve our own problem. But I would say after that, we looked at ourselves differently. Everybody who worked there felt differently about what they could accomplish. So since that time, we actually bought ETC just recently, which is a competitor of Apex. We bought a flood insurance processing business that Aon was trying to get rid of and had bought almost 5 years ago. So we're in the process of rebuilding that today. I didn't know there was older technology than in the finance business, but in the insurance business, it's even older. So there's a lot of opportunity there. We bought an esports team that actually had a bunch of trouble as well, Evil Geniuses, which is actually, they're great gamers. They just didn't know how to run their business. It was owned by Twitch at one point, and when Amazon bought Twitch, that got Twitch had to unwind that. They sold it to the players. It turns out the gamers weren't
great. They're great gamers.
They're great gamers, right? And they have potential, right, for being part of the business, but at that moment, that wasn't the right time. So I think that turning point for us really changed sort of our destiny.
Yeah, I mean, it changed your identity in many ways. And it's fascinating to know that the underlying technologies that are enabling the betterments and the allies and these real disruptors in some sense, you're the technology that's enabling them to disrupt.
Who would have guessed?
Who would have thought, right? Which is really neat. Now, you say that the story that you just told could be made into a movie. Now, you may not know this, but Jenny would be the one to actually go make it into a movie. Correct me if I'm wrong on this, but you produced a musical that won a Tony.
That's correct. Again, a fluke, but we do have a Tony in Memphis won the Tony a few years back.
Yeah.
But yeah, that was an interesting moment. And then when it all happens and you've got all the different, famous people who are part of these Tonys sitting around you and they announce yours and they're like, you're going on stage. I'm like, what?
Yeah, I'm in the FinTech business.
I am not going on stage. So I did not go up, even though supposedly that was part of the program. Yeah.
That's amazing. So Jenny, we've had the privilege to work together now for a while on this FinTech initiative at Ross. That's going to serve our undergraduates, our graduate students, and students from across campus. What was the need that you saw that inspired you to sit down with me and say, hey, let's co-create and imagine what this could be? What's the business need or the talent need out there that as a FinTech company leading the way that you're trying to solve by partnering with us?
I'll back up just a little bit. The last time we spoke, we talked about why isn't all finance just FinTech? And when will it be, right? And if you think about it, PEAK6 is often given credit for being the first off-floor equity options trading firm. I don't know if that's true or not, but we did it very early. We've had the good fortune to be able to make some of those bets, and those bets come true. But as time has gone by, right, the financial world is not keeping up with the rest of the world. So if we talk about customers, digitally native human beings, their expectations are high everywhere. And then they come and get a financial product. And that was a really hard challenge for Robinhood to overcome, right? So how do we keep up with that? And then how do we keep up with the technology that keeps changing? Well, the large banks that are out there, they're really behind, right? Like if you're talking about, yes, FinTech has started, clearly, we're still early innings of what needs to happen. One of the things we noticed 5 years ago for our our equity options trading business was the need for our traders, we grow our traders. They come in, we give them an options program. They take about a year to get up to speed. We actually teach them to code today. But as we were going through that process and talking to Michigan, why am I doing that, right? And it's not just about coding, it's about all the other elements that belong to it. As my kids say, I'm a bad mom, and since my younger kids, I have two older kids, my two younger kids have been 9, they're forced to go to a coding camp every summer. And one wants to and one doesn't. I don't care if you don't want to. It's not about you being a coder. It's about you being able to talk the language of tech, right? If we learn Spanish and French or whatever language, why aren't we learning Java or Go or whatever it is, right? And so I said, I'm seeing this. You're not going to be able to work at PEAK6 someday. So if you want to, you better do what I said. So through this program that Michigan was, opportunistically looking to do, it's great for us as a firm. I think it's great for finance as a sort of the larger ecosystem, right? There's a lot of low-hanging fruit. And that can be done if we give especially those business school kids, the opportunity to understand all the data and tech that goes along with solving problems today.
Yeah, I mean, the number of companies that say to me, we can find people who understand, or at least understand the fundamentals of business, and we can find talent who understand tech, coding, data science, etc. It's really hard to find the intersection of those two.
Right.
And here we have a deep understanding of finance and the business models that underlie that, and the technology, and bringing those together in a really revolutionary way, which is really, really exciting. Now, this idea, and I'm going to give you my one question warning, and then I'm going to open it up. This idea of finance, this idea of technology is not new.
No.
As I said, PEAK6, and as you've told stories, PEAK6 has been doing this since its inception, and many other firms as well. So why is FinTech cool now?
Because it's possible. When you're the behemoth of the financial organizations that have existed out there, someone had to start to break down the walls. And especially in the robo-advisory world, they started to chip away, just at the surface, by the way, because there's people like us that were in the background. And mind you, we had changed the front, but we didn't change the whole back of that system. Now, over time, we've chipped away at it, but we haven't changed it all. But it's possible, right? You couldn't break the outer shell. And now you're starting to. And now you're starting to see those larger firms come in and really demand it. So one example, we've actually started 2 other firms this year, one on the West Coast, one on the East Coast. The one on the West Coast I can't really talk too much about yet, it's not public, but we hired 3 people from SpaceX, a very senior gentleman from there to lead it. We took 2 of our most senior architects, and then 3 business people, and we are building a business out there to hopefully transform what we believe. When we first thought about this idea, was a 4-year project. Today, we think it's 2-ish years before we can actually deliver a product out to the world. So that wasn't possible, and now it's possible. And in fact, the people who are working there that have come from SpaceX and said, "Why are you doing this now?" And I said, "Because I couldn't do it the way I can do it today." Yeah. So it's realistic. Now, on the flip side of that, we're starting a company called Carrick, which I was telling you about earlier, QARIK, on the East Coast. So the ex-head of Google Finance and a senior individual from Wall Street, we met, and they were looking to solve exactly what we were looking to solve, some of these large problems, because especially as a clearing and custody entity, we run into bulky, weighty, heavy technology all the time. It makes us look bad, right? Someone like Robinhood's like, "Why do you do that?" And I'm like, "I don't know. Like, this is terrible. I know it's terrible, but we've got that all the way in the back of our system." So, but what Carrick is planning to do is to be a high-end tech consulting firm. We've hired several ex-Google directors and more senior. We actually are building up a team in Belfast, and they want to go and solve the largest problems. Those ones that the large banks, for example, large insurance companies can't solve with their immediate teams, and just need to take offline and clean house and, put a whole new level 2 in, right? And we're partners with Google, which is really exciting, that they want to do it and they understand the demand. It's not, how they've necessarily done business before, which is why these guys spun off and decided to approach the problem this way. But we think we know that there's change coming because we're part of it. How big of a part? Who knows? Right.
And what's so exciting about this new phase that we're in the FinTech journey is that because the technologies now are accessible and almost democratized in some sense, right? You can go create and scale fast in ways that historically you just couldn't do.
That's right.
And that's why I think we're seeing some of this change at the pace that we're seeing it now, when decades before you just couldn't do that.
Yeah, no, I mean, just something simple, a clearing firm. When I grew up in trading, we at O'Connor, they self-cleared. So as a young kid, you would go to night outs and work and get a little bit extra money and a free dinner. But there was this idea of a front, middle, and back office. And all these years later, I'm now seeing that in a totally different light. That's because they had to do it that way. Right? They didn't know how to make this workable, all these different rules that they had to follow and all the processes, but the nascency of the technology that they had to use, right, made it really difficult. So
yeah, it's so exciting. And I mean, these underlying technologies and the businesses that you're enabling and scaling, they shape how we live, how we work, how we interact globally. And you're really on the leading edge of that. So it's exciting. Yeah. Let's open it up. What are you all interested in? You've heard us talk a little bit about the history of PEAK6, about the evolution of FinTech, some of the work we're doing at the business school in this space. What are you seeing? What questions do you have?
Do you find one of the drags in moving to FinTech is the regulators?
Absolutely. I mean, they're doing their best, and you'll find some good ones who are at the forefront, but it's the rest of the organization that's difficult. Also in flood insurance, what we're learning, FEMA, actually, we don't offer insurance. In fact, none of the insurance companies do. It comes through the federal government. So same idea, right? We're understanding these regulated businesses and how difficult it is to make change. I don't know which one is better, the government or the regulators on the financial side, but there's promise because there's people in there, right? But there's such a large organization to change. It's difficult and frustrating. And by the way, I think that's where, obviously nobody's getting away from the regulators, but some of the largest organizations who are, just weighted down in these old ways of doing it because of the way the regulators did it, these other young guys are going to come up and solve it in a better, different way. And I think it's really dangerous for these other guys out there. So
yeah, it's
Netflix blockbuster, right? Think about that as an analogy.
Yeah, it's a really important question as to what role will regulation and the regulators like the Federal Reserve, for example, play in this FinTech space. I've had the privilege of working with the Federal Reserve for the last few years on a variety of issues. And I remember sitting beside one of the leaders of the Federal Reserve, and in the room were CEOs of the largest banks and executives and entrepreneurs in the FinTech space, and mostly technology companies that are becoming banks. And I remember leaning over and saying, hey, help me understand these banks that are becoming technology companies, because that's the present and the future. You have these technology companies that are becoming banks, and only one half of the room is regulated, right? At some level. And what's that world going to look like going forward? I think it's an interesting question. What is a bank and what's a financial institution is being challenged. So,
exactly.
Yeah, please.
I'm curious, you mentioned a couple of times that I was a good risk manager. That was a big point. We were really good risk managers. And tech typically gets a reputation of growth at all costs or breaking the rules. So I'd be interested to understand how you think about or how you train future leaders about how to consider risk management in kind of a more tech-infused financial services world.
I think that's interesting. I think for us, because we come from an options trading world, we tend to be a little bit further right on the curve. So tech, usually we're pushing them, they're not pulling us. That might be opposite in other places, right? Where tech is really pushing for more growth, taking more risk. I think, again, the matching of the FinTech, the more the business understands what tech is trying to do, the less fearful they will be. The more Michigan students can understand from the curriculum they're going to learn in this new FinTech initiative, the easier it is to take on those risks. Right? So if they're sitting on side A and tech is on side B and tech wants to push forward and they're pulling back, if they can understand the language that's being spoken, it really is an education process. for me, right, I didn't come from technology at all. Matt actually was an English major of all things. He just happened to love the markets. So we were both fortunately put into the options world and were taught it, but we didn't learn technology at all. And the way we did it actually was the reason I think we're successful at PEAK6 about it, because O'Connor had all their trading people in a room, and then across the elevator bank were all the technologists. They didn't commingle. So when we started PEAK6 and we started to realize we needed to do technology, we actually had technology trader. That doesn't really work either, but to the point, right? How do we integrate and let them understand each other? And so over the years, I think our other businesses gain from the fact that the trader and technologists in our sort of what our bread and butter of our business have been so close. I'm never not talking about technology, and I don't have a technology background. I had to learn it on the fly, right? And I expect my technologists to explain it, to whiteboard it for me, to do a different diagram, to say it in another way so that the rest of the team can understand. And I think the more and more that we get solid students who show their knowledge, that translation will be a lot easier for the technologists to take the risks they want to take, and vice versa, of course, right? The technologists to understand more about the business. But it tends to be the one way, because like you said, the technology tends to be pushing for that risk, growing more, faster, better.
Yeah, it's fascinating.
Question about entrepreneurship. Right, you've taken lots of risks in your career. O'Connor, I actually was at O'Connor for a short while, so I want to talk to you.
Nice.
But just wondering what your advice would be to a lot of us that are in careers that have see the work that you do on a regular basis. It's a business process, it's a whatever it is, but it might lend itself to an entrepreneurship, you have an entrepreneurial idea. But taking that personal risk to really take your career to a different level from a safe place to something that's not quite so safe. Any advice there?
Someone asked me this the other day, and I said, I think there are some people who are just sort of born and they know they're willing to take those risks. I don't think it's something you can't learn or can't do. But I do think you have to have a conscious thought that I actually do want to do this, whatever this is. I think you have to decide that. Once you've decided that, taking the next step isn't like going on Shark Tank, right? The next step isn't going and raising and how much money do I have to do, right? It's just one step at a time, right? And when we started PEAK6, we actually had plan A. What we built, which is there 22 years later, is plan B. We never did plan A. We're taking our time. But what we did is we did something that we knew that we could do, right? And just took a step forward. Not everything has to be a company. We start companies a lot. I mean, I tried to look back at the data, and there's so many companies that we've started and stopped. It's never going to be the first one. Most of them fail. If you have decided sort of top down, right? I want to do this. I want to try. And it doesn't have to be a massive business. It could be a department within a business, whatever it might be. Once you've decided to try, if you wait, it gets harder, right? That loop gets closed, what you thought was an idea, right? The idea and the execution are equally hard. So if you have the idea and you don't know how to execute, partner with somebody. We were super fortunate to grow up in a firm that was a partnership at all times, and PEAK6 was a partnership. It's a C Corp today, but we still talk about everybody as our partners. Don't do it alone. I'd also suggest that. And whether that's somebody who's committed to the whole thing or just committed to helping you see it through, right? It's a little bit like losing weight. You tell somebody and they're like, they keep you real.
Yeah.
It's like, you said you wanted to do this. What does it mean? What strides have you taken? What did you investigate? What did you learn? Who did you call? Who did you network with? Each one of those steps. It's not, I've decided it all. I figured it out. And this is all I need to do is this very large thing to go from here to here. It rarely happens that way. Small, steady progress. Then you'll get some momentum, then you'll get some support, and then you start to go. right? We, compared to today, we raised $1.6 million from a small group of people, a couple of Connor partners, some friends and family on Matt's side, and we took in from the same people another $500,000 like 6 months later and never raised again. And frankly, the way people raise money today, I think, is very complicated. Aside from the fact that it takes forever and like 50% of your time is spent raising money.
Mm-hmm.
So then you're not actually executing. There's no race to get rich. There's no race to build a large company, right? It takes a long time. It's a marathon, it's not a sprint. So.
That's great advice. Let's give Jenny a big round of applause.
Thank you.